Welcome back to Smart Stock Sam. There's big news on this stock recently, and market is reacting as expected. But let's slow down and focus on the facts and see how they are shaping the narrative. I'll cover what's real, what's noise, and what it could mean next. For quick updates like this, subscribe and tap the bell to catch every market move on time. All right, here we go. How does a company go from signing a massive expansion deal with IBM to losing 40% of its value in less than 30 days? Better yet, how many NASDAQ stocks do you know that are literally paying out Memecoin dividends to their shareholders? This is the reality of Datavault AI, ticker symbol DVLT. Right now, this stock is the ultimate Jekyll and Hyde of the penny stock world. On one hand, you have high-level artificial intelligence tech and a $4 price target from Wall Street analysts. On the other hand, you have a major institutional shareholder dumping 14 million shares onto the open market in just 72 hours. If you are holding this stock, or if you've seen it trending on social media and you're thinking about buying the dip, you need to stop. Do not place a trade until you hear what I have found buried deep inside data. Because between the IBM partnership, the February 21st Memecoin deadline, and the Silex sell-off, DVLT is currently a ticking time bomb. The only question is whether it is going to explode up or down. Let's start with the reason why everyone was screaming to the moon just 2 weeks ago. On January 8th, Datavault AI dropped a bombshell. They announced an expanded collaboration with IBM to deploy their SanQtum AI platform at the edge in New York and Philadelphia. Now, for those who don't speak tech jargon, this is a massive deal. We are talking about AI-driven data monetization. Datavault is essentially trying to create the infrastructure that allows businesses to turn raw data into cash using EM's cloud power. They're even moving into luxury retail, partnering with Reflexi on Fifth Avenue to create 3D digital twins and holographic displays. Wall Street saw this and went wild. The Maxim Group set a price target of $4. At the current price of around $1, that is a 300% upside. If this were any other stock, that IM news alone should have sent this thing to $3 overnight. But instead of going up, the stock collapsed. Here is the part of the story they don't tell you on the hype channels. Between January 6th and January 8th, the exact same time the IM news was circulating, Silex Holding Company, a major institutional shareholder, decided to liquidate. We're talking about 14.7 million shares dumped on the open market in a 3-day window. Imagine you're trying to fill a bucket with water, but someone just cut a hole in the bottom with a chainsaw. That is what happened to the DVLT stock price. This is a classic penny stock tragedy. The news was good, the tech is real, but the institutional overhead was too heavy. When a holder that size dumps, it creates a waterfall effect. Retail investors see the red candles, they panic, they hit the sell button, and suddenly, a $1.50 stock is struggling to stay above $1. But this brings us to the most bizarre part of the story. Most companies, when their stock crashes, issue a boring press release about long-term value. Datavault decided to give you a meme coin. Mark your calendars for February 21st, 2026. Datavault has announced a distribution of warrants and the Dream Bull Memecoin 2 tokens. This is a move straight out of the crypto playbook, but it's happening on the NASDAQ. By tying equity to digital assets and warrants, the company is trying to do two things. First, they want to reward the diamond handholders who survived the massive dump. Second, they are trying to create a massive incentive for people not to sell before late February. Think about the psychology here. If you're a retail trader, are you going to sell at a loss now? Or are you going to wait to see what these meme coin tokens are actually worth? This creates a supply squeeze. If nobody wants to sell before the dividend date, and any bit of good news comes out regarding the IBM rollout, the stock could gap up violently because the float is being locked up by people waiting for their tokens. It is an aggressive, high-risk marketing move that could either be a stroke of genius or a desperate attempt to keep the price afloat. Looking at the chart, the situation is tense. Right now, the stock is trading significantly below its 20-day and 100-day moving averages. Purely from a technical standpoint, the trend is bearish. We've seen a 41% drop in the last month alone. However, the relative strength index is hovering around 44. It's not quite oversold yet, but it's getting close. Historically, when a stock with big tech partnerships gets beaten down this hard by an institutional seller, it eventually finds a floor. The big question is whether $1 is that floor. We are seeing some support at the 90-cent to $1 range. If it holds here and the selling pressure from Silex is finally exhausted, we are looking at a massive spring-loaded setup. You have a stock with a $4 analyst target, an IM partnership, and a February catalyst, all trading at a huge discount from its recent high. So, what is the final verdict? Datavault AI is not for the faint of heart. This is a high volatility play that is currently being used as a punching bag by institutional sellers. The bull case is that the selling is over, the IM revenue starts hitting the books in the second quarter, and the February dividend creates a retail frenzy that squeezes the shorts back toward those higher price targets. The bear case is that more dilution follows the warrants. The Memecoin turns out to be a distraction, and the stock continues to bleed as retail loses interest. Personally, I'm watching that 90-cent level like a hawk. If it holds, the risk-to-reward ratio for a swing trade into the February dividend is one of the most interesting setups in the penny stock market right now. But remember, in the world of microcaps, you can be right about the tech and still lose money on the trade if you don't watch the insiders. Stay cautious, keep your position sizes small, and keep your eyes on the data. Alright, that's the update. If you want more quick fact-based insight like this, subscribe and tap the bell icon so you don't miss the next one. Drop your thoughts in the comments, and I'll see you in the next update on Smart Stock Sam.